Bitcoin for family offices in 500 seconds. There was a time when I didn't believe in Bitcoin. I only believed in the NVIDIA GPU revolution that would change everything exponentially. Here's Jensen Huang's law superseding Moore's law in accelerated high-performance computing. In 2017, I wrote a thesis on the technology supercycle that would not be stopped by recessions, trade wars, or even real wars for over a decade. I also taught investors why NVIDIA gaming was creating the foundations of AI. It took 5 more years for the world to catch on. Before Moore's Law, this was one of the simplest examples of the deflationary power of technology. In 1880, it took 1 minute of work to buy 4 minutes of light. By 1950, 1 minute of work bought 7 hours of light. Here's the basic landscape for investing. If you've been underexposed to stocks, you've missed out. Real estate always has opportunities for the savvy, and we'll come back to that barbarous relic gold. So why should Bitcoin be a new asset class as big as gold or oil? I suggest it's an idea whose century has come. All the other asset classes are ancient, and none have a digital, decentralized, mobile technology at the core. The 1980s cypherpunks like Tim May and Hal Finney were in search of digital, stateless, private money, and Satoshi delivered in 2008. Here's Michael Saylor's map of global wealth. 900 trillion in financial and physical assets. Real estate at 330 trillion. Bonds 300 trillion. Equities 115 trillion. And gold comes in at 16 trillion, just under art. Bitcoin is currently just over 2 trillion. Let's say this is your typical allocation strategy. All of these assets live within and are valued in the dollar system of constant inflation and debasement. If the dollar is inflating and melting at 7% per year, you're not going to win with this portfolio. Peter Diamandis has been studying exponential technologies for a while. Bitcoin checks all the boxes of the 6Ds, plus decentralization. Many institutions and corporations will soon be having their Kodak moment where they stupidly say no to digital photos. Look how fast the world has changed in 125 years, from electricity to the iPhone. The Wright brothers were almost ready to give up in 1903. 66 years later, we put a man on the moon, and the digital age has just begun. How is AI transforming the world? Beyond our wildest dreams, because it's the internet on steroids. Microsoft is building mega fifth-generation data centers in my backyard in southeast Wisconsin. And still, nobody is talking about NVIDIA Omniverse and simulation and what it's going to do for science, engineering, and global challenges. The growth of the AI economy is going to dwarf all previous technology revolutions. Smart, ultra-high net worth investors will want to protect that wealth by diversifying away from the dollar system. From sovereign wealth funds to the states of Florida, Pennsylvania, and Texas, they will come for Bitcoin. We live in the digital space age of genomics, AI, and robotics. Isn't it time for our monetary system to evolve out of the Middle Ages? The internet cannot be broken because it's a distributed, redundant network that will always resurface. And look what we've built on the internet without government permission or interference. NVIDIA was missing on the prior slide, and in this evolution of modern technology, the names Steve Jobs and Jensen Huang should soon appear. It was the goldsmiths of London in the 17th century who created fractional reserve banking. Just as we are not going back to newspapers, we cannot go back to gold. After 20 years of big money coming for Bitcoin, here's what Saylor envisions the world of assets will look like in 2045. The pie has grown over 4x to 4,000 trillion, and he thinks Bitcoin can easily dwarf gold. I agree, but how could we possibly think something so crazy? First principles of scaling can help us wrap our heads around it. Fortunes are made when you see something that few others see. I think this is one of those times, just like when I saw GPUs about to change the world and create new wealth. So, what trends are shaping this potential? Pure and simple, it's monetary expansion and dollar inflation. If large investors ever believed Congress would change or we'd grow our way out, that fantasy has been crushed. Here's a snapshot of how US debt just jumped by 275 billion into Q4. A recent culprit was suspending the debt ceiling so we could fund near-term deficits. Well, the debt just climbed 4.3 trillion in less than 18 months to 36 trillion. What are the chances those deficits become endless given this trend? This is Congressional Budget Office math for the primary deficit, blue bars, and the net interest cost, yellow bars, from 2005 projected to 2055. The big deficit spikes were COVID. CBO is telling you that deficits will run over 3% of GDP in perpetuity. And look what happens to the runaway interest cost. I don't know if the 80% in 5 years is accurate, but until I get a new Fred chart, I'm not one to doubt it. So, which is the real Ponzi? Runaway debt and printing, or a finite, incorruptible asset? It's a simple question with a simple answer, I believe. The chart I showed you from CBO, with yellow bars of interest descending into a runaway cascade, will create a total deficit approaching 8% of GDP annually. Just imagine how much new debt and dollar printing will be required to fund this. Monetary inflation, or deficit printing, has run at 7 to 8% for a century. Combine that with the CPI plus your cost of capital, and your real investment hurdle rate is 13% for the past 14 years. Here's a bigger view of debt crushing GDP. I'm not saying we'll end up like Japan at 250%, but the US at 125% shows similar signs in the trend of large nations that can borrow, spend, and print at will. RFK spoke at the Nashville Bitcoin conference in July and permanently raised the bar of global discussion about sovereign adoption. He advocated buying 4 million Bitcoin over 20 years so the US would own 19% of all, just like our gold reserves. Saylor calls Bitcoin Cyber Manhattan because it was the most asymmetric trade in history when the Dutch bought an island for some trinkets. Now that Wall Street has entered the market, I think we have 50% downside and 1,000% upside for the next 5 years. Saylor adopted a Bitcoin standard for MicroStrategy in 2020 because he saw there was no way out for most companies his size. He has renamed the Russell 2000 the Zombie 2000. Here's a bold claim. If you are skeptical, you should be. It took me years to understand, so I don't expect any intelligent person to take it ipso facto. It should inspire curiosity, research, and due diligence. Here were my projections in September. Bitcoin would see 125,000 in Q1. It could happen fast if a few corporations and nation states decide that BlackRock shouldn't own all the BTC. I was a skeptic for so long because I thought Saylor was going to destroy MicroStrategy in the 2022 bear market, and because I didn't know how to prevent hacks. Those problems have been solved by Coinbase, BlackRock, Fidelity, and innovative companies like Swan. I love this MasterCard Venn diagram. Here's Wyoming Senator Lummis at the Nashville show. I don't know if she has Trump's ear, but a majority of the Senate is listening. Finally, America has run out of magnificent purchases like these. Whether Congress stalls for another year makes no difference. This is our chance to grab big pieces of the new world for ourselves while it's still on sale.